Good evening, everyone. A warm welcome to all of you at today's session. Myself, Prachinegi from CA Sansaar. Today is the 11th day of ongoing 14 days webinar MahaKumbh, which is started from 14 November 7 p.m. onwards live on YouTube. Today's session will be taken by CA Kriti Chhabra ji on the topic ITC on promotional schemes. If we talk about Kriti Chhabra ji, she is a principal associate at Lakshmi Kumaran and Sridharan attorneys and is dedicatedly involved in the indirect taxation advisory for past 8 years. Kriti ji carries an extensive experience in indirect taxation advisory, which broadly includes advising clients on tax efficient business models, devising models for business restructuring, reviewing business operations, helping clients in compliance related issues, and so on. In addition to handling various other complex industries, she has expertise in aviation industry, transportation and logistic industry, real estate industry, hospitality industry, e-commerce operations and travel agents. Hello?
I think Prachi, your network got disconnected. Yeah.
Ma'am, you can start your deliberation.
Okay. Yeah. Hello, everyone. So today I'm just sharing my screen. Prachi, please confirm if my screen is visible.
Yes, ma'am.
Okay. So before starting with my session today, so I just thought to have some discussion on another matter first. That is, as we all are aware of the fact that this CA Sansaar is a great contribution by Mr. Vivek Khurana. So, and he's also contesting the Central Council election this time. So, I thought it is very important for us, or I thought it is important to discuss this aspect before starting with the session. So, I believe the CA Sansar platform is a very great platform to gather knowledge, to grasp knowledge about various versatile sectors, be it taxation related matters, be it indirect tax or direct tax, or be it other corporate law related matters, or be it other general matters, etc. So that's a very good platform. So now this is an initiative taken by CA Vivek Kurana. So he's now contesting in central election. So central council election. So I believe he actually deserves to be he deserves to be selected in this central council panel for certain very specific reasons. I personally have at least three pointers which I everyone should keep in mind while voting for someone or while voting for someone in the central council election. So I personally feel that his initiative of the CA Sansar is a great initiative for the reasons every one of us is well aware of. Like the CA Sansar is actually a platform which has helped the professionals as well as the students to uh, cater their knowledge to basically have a knowledge regarding various versatile matter as we discussed. And secondly, definitely his initiative towards professional, that is towards the profession of CA, is also very interesting. I have seen in multiple instances where he actually take an initiative in highlighting the matter to the ministry, etc. Like I have seen that he immediately tweeted about the issue which is going on in GST when the GST audit was removed, and even in income tax when the new website was introduced, but that was not working very correctly, and so on and henceforth. He has actually taken this initiative a lot of times, and that's another thing which actually is worth considering while determining as to who should we give a vote to. And third point, definitely his contribution towards the society and humanity. I've also seen him contributing a lot towards the society while everyone was dealing badly with COVID. So he has actually helped a lot about for the people. Probably he may not know much. So therefore, due to all these reasons, I feel that yes, he is the very deserving candidate for the central council election, and we should definitely appreciate these facts and should consider. So this is one of the vote appeal by my side. Now with this, I'll start with my topic. So today my topic is GST implications on promotional schemes and other ITC related aspects. So my session will mostly revolve around ITC related input tax credit related issues in promotional schemes and another section, that is section 17.5H. So I'll focus more on section 17.5H, and we'll also discuss certain promotional schemes. What are the problems that are being going on in the industry under the specifically with respect to promotional schemes. So, as we all are well aware of the fact that eligibility to claim input tax credit is governed by Section 16 and 17, then read with Rule 42 and 43, etc., and there are certain other sections and rules which help in enabling a person to claim the credit. So, Section 16 is the most important enabling provision, which gives and which basically entitles a person to claim a credit, and that says that every person subject to certain conditions shall be entitled to take credit of such input tax charged on goods or services which are used in the course or furtherance of his business. So if we see section 16 talks about used in the course or furtherance of business. Whenever we talk about business, we always refer to income tax, whether a particular expenditure has been allowed as a business expenditure for the purpose of income tax or not. Since income tax has been evolved for so many years now, so we can easily found certain jurisprudence in relation to this course and furtherance of business under income tax. That is one thing. But then when we move on, there are a lot of other sections which create multiple conditions and restrictions while availing a credit. And one of the most important restriction is cast upon, in section 17.5. So this is a new type of section. This is the most talked about section in the GST era so far. So section 17.5 says it starts with the non-obstaining clause. Definitely, it says that notwithstanding anything contained in section 16.1 and section 18.1, input tax credit shall not be available in respect of the following. Namely, one of the most important clause here is H. So 17.5H is the one of the most talked about and one of the most controversial clause which I want to highlight upon in today's session. So it says goods lost, stolen, destroyed, written off, or disposed by way of gift or free samples. So basically, notwithstanding anything contained under section 16, that is, even if your expenditure is or qualifies to be a business expenditure or is incurred in the course of furtherance of business, still you are not eligible to take a credit of those goods that are lost, stolen, destroyed, or written off, or disposed of by way of gift or free samples. Now, if we see all these terms are in itself create a length of dispute. So this has actually opened a Pandora box of multiple questions on entitlement of a person to claim credit. But one of the most important word in in this clause is gift. They have said that disposed of by way of gift. Now the term gift has not been defined under GST law. So therefore, we'll have to refer to common parlance to understand the meaning of gift. So if we see in common parlance, we can refer to Transfer of Property Act, which says gift is the transfer of certain existing movable or immovable property made voluntarily and without consideration. Similarly, if we see Merriam-Webster dictionary, that also says something voluntarily transferred by one person to another without compensation. Third, even if we see Black Law Dictionary, that also talks about a voluntary conveyance of land, transfer of goods, not upon any consideration. So basically, if we see that this basically if we see the essence of gift is that it should be voluntary in nature, and the same should be without expecting something in return, that is without any consideration, and that can be given out of generosity, and there should not be any mandatory provision on the person to give a gift. So in a sense, if we see, gift should be voluntary and without any consideration. With this understanding, there are a lot of issues which has come up under section 17.5, and some of them have been addressed by advanced ruling authorities as well. So मैं थोड़ा सा वो डिस्कस करूंगी जो इस टाइप के इश्यूज हैं जो सेक्शन 17.5H में एडवांस रूलिंग ने issue address kiye and how they addressed, that is very interesting to know. So I'll discuss those things here. So I'll discuss this through the case studies itself. So now section 17(5)(h), as we have understand कि कुछ एक restriction place करता है. Now there can be scenario that, let's say, whether there is a difference between gift vis-a-vis goods supplied to promote a business. For example, there is a automobile manufacturer who usually basically conducts some meet for its dealers and its customers, etc., and he distributes the gift there. Gift as in like the Diwali gift. It is very common for these manufacturers that they distribute the Diwali gifts to their close or their big customers. So question is, that is definitely a gift. There is no doubt about it. But the question arose in this specific advance ruling in case of Haryana, that the applicant wanted to differentiate between those gifts which are given in Diwali or voluntarily in nature, but vis-a-vis those goods which are being distributed in a meet with dealers, etc., so as to promote his own business. For example, like his pamphlet, his calendar, wherein his name was embossed, his brand was embossed, the caps, the pens, etc., and certain other stands, etc., on which again the brand was imposed. So he wanted to make a point that these are not gift; these are being given so as to promote his business. So that's the point he wanted to take. But Advanced Ruling Authority of Haryana took a different view, and they did not get convinced with the applicant contention. And they said even if these are distributed with the business promotion being kept in mind, but since Section 16 talks about a business expenditure, and Section 17 starts with non-obstaining clause, so they said ki even in those cases also, this will be kept at par with the distribution of gift, and therefore आपको credit नहीं मिलेगा. In my mind also, this is a correct proposition made by the Advanced Ruling Authority of Haryana, except a small observation which I'll discuss later on. There can another be a very interesting case of CSR responsibility, that is corporate social responsibility. ये मैटर इंडस्ट्री में और एडवांस रूलिंग अथॉरिटीज के बाद बार 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 उठा कि कॉर्पोरेट सोशल रिस्पॉन्सिबिलिटी में समटाइम्स द कंपनीज टेक अ व्यू कि दे विल डिस्ट्रीब्यूट सर्टेन गुड्स. फॉर एग्जांपल, कोविड के टाइम पर सर्टेन कंपनीज डिसाइडेड टू डिस्ट्रीब्यूट द ऑक्सीजन कंसंट्रेटर्स एज अ पार्ट ऑफ देयर CSR एक्टिविटी, और मास्क और सैनिटाइजर्स एक्सेट्रा. Then the question arose कि if we see the corporate social responsibility from income tax perspective, that is not a voluntarily activity being done by anyone. Rather, this is a statutory obligation being placed on certain companies who qualify certain conditions. So they have to mandatorily do the CSR activity. So they said distribution of this goods, etc., as a part of my CSR activity is not voluntary in nature. So therefore, a view cannot be taken that these are gifts. And further, this type of distribution does not fall under any other limb of H, section 17(5)(h). So therefore, they contended that in this case, there is no requirement to reverse credit under section 17(5)(h). In this case, we have a divergent advanced rulings with us. 2 to 3 advanced ruling, like if we see Gujarat advanced ruling. So, and there are other advanced ruling as well, which have said, ki first of all, this is not a business. This does not qualify the condition of section 16 itself. Why? They said because even under the Income Tax Act, the expenditure being done for meeting this corporate social responsibility is not treated as a expenditure, and there is a specific provision which states कि specifically ये particular expenditure आपका business expenditure नहीं treat किया जाएगा. So by relying upon them, the AR said that in these cases, this expenditure cannot be treated as a expenditure done in the course of furtherance of business. Therefore, it does not qualify the condition of section 16 itself. So we need not to go into section 17. So the credit is barred. However, there is another advanced ruling in the case of UP, wherein in the case of Dwarikesh sugar industries, that's very interesting advanced ruling जो कि favorable थी assessee की. उसने 2 points observe की. पहला कि जो business expenditure है, that is specifically for the Income Tax Act, that is a deeming fiction being created. एक law का deeming fiction आप दूसरे law में नहीं borrow कर सकते. So therefore they said generally अगर देखा जाए तो CSR activity is an expenditure. Secondly, if we talk about section 17(5)(h), they said yes, this is not a voluntary in nature. Rather, this activity is being done as a statutory obligation. So therefore, they said that the credit should be allowed. This is a very interesting advanced ruling. And they have actually made a very good point, specifically when they discussed about this business expenditure issue. However, I have a reservation on this, that they did not discuss Schedule 1 entry 1 transaction. Now, what does it say, and what does this entry has an implication on this transaction? I'll come to that part later on. But that aspect was not discussed. So, therefore, this advanced ruling is incomplete in that respect. Let us move ahead. Another example can be, if we see section 17(5)(h), that says goods destroyed, written off, or disposed of by way of gift or so. Let's say कि a manufacturer, there is a manufacturer of glass who basically purchased some raw material while making the manufacturing of glass. उसने raw material purchase किया, then उसने अपना manufacturing product बनाया. That manufactured product got destroyed due to fire, or basically due to some other reason. The question arose that section 17(5)(h) talks about goods got destroyed. In this case, the manufactured product is getting destroyed, not the input which is being used in the manufacturing of this good. So therefore the question arose कि क्या हमें उस input के ऊपर भी credit reversal करने की requirement है under section 17(5)(h), which itself did not get destroyed, but rather the goods in which it has been used got destroyed. So this was another important observation or important issue being highlighted by the applicant. So is case mein, in my view, if we see section 17(5)(h), that states the credit shall not be allowed in respect of the following, in respect of the following goods which have been destroyed. So basically, since the inputs are being used in respect of those goods, so therefore credit not will not be allowed. And similar observation being made by this AR also here. If we move forward, another issue can be goods got destroyed. Let's say you have a furniture which was purchased by for rupees 10,000 just 1 month back, but then because of some fire eruption, the same got destroyed. But now you can sell it off as a scrap, right? You are selling it off as a scrap of wood that can price you only 500 rupees. So a thing which was purchased for 10,000 rupees got destroyed, and now you can sell it off only for rupees 500 as a scrap. Question arises whether there is a requirement to reverse credit under section 17(5)(h) that the goods got destroyed. See, in this aspect, we can see that section 17(5)(h) caters the situation wherein the goods got destroyed or not, or being disposed of, etc. So, if we see the terms used under section 17(5) are basically those wherein there is nothing left in the possession of the assessee, जो कि आपके पोजेशन में अब गुड्स रहे ही नहीं है. सो देयरफॉर एक व्यू लिया जा सकता है कि जब आप एज अ सेल उसे एज अ स्क्रैप उसे सेल कर रहे हो, सो इन दैट केस दिस इज अ पर्टिकुलर सप्लाई इटसेल्फ. सो देयरफॉर आपको पीछे का क्रेडिट रिवर्स करने की जरूरत नहीं है, बिकॉज दैट द गुड इज स्टिल इन पोजीशन एंड यू आर मेकिंग अ टैक्सेबल सप्लाई ऑन फ्रंट एंड. अनदर क्वेश्चन कैन बी कि आपके गुड्स डिस्ट्रॉय तो हो गए, बट आप उसे सेल नहीं कर रहे, and you are handing it over to your insurance company while claiming claim against some calamity which happened like fire etc. So आप अपने इंश्योरेंस क्लेम के अंडर उसको इंश्योरेंस क्लेम कर रहे हो फ्रॉम इंश्योरेंस कंपनी, and you are not disposing it off as scrap, and as a mandatory condition you have to hand it over to the insurance company. So whether a view can be taken that there is no requirement to reverse any credit or so. So in this regard also we'll have to basically keep in mind that when a scrap is being handed over to an insurance company, that is not a sale transaction. The insurance claim which is being given by the insurance company, that is not a consideration towards the sale of scrap. Insurance company gives you a claim with respect to your insurance policy. इंश्योरेंस कंपनी ओनली गिव्स यू एन इंश्योरेंस सर्विस जिसके लिए आप प्रीमियम पे करते हो, एंड क्लेम इज नॉट अ कंसिडरेशन टुवर्ड्स एनी सप्लाई. देयरफॉर this has to be keep in mind that when these goods are handed over to the insurance company, this is not a sale transaction, and since the goods are destroyed and the same are not in possession of yours anymore, so section 17(5)(h) will come into picture and you will have to reverse the proportion, the credit which pertains to that good. There can be another case wherein normal loss of raw material while manufacturing goods. So basically, this is the normal practice or normal, I mean, the situation जहाँ पर आपका while manufacturing certain goods, certain normal and abnormal loss होते हैं. So is it necessary कि आप उन normal and abnormal loss के लिए भी ITC reverse करो? So this particularly this issue has been addressed by Madras High Court, wherein they said where the loss is occasioned by the process of manufacture that cannot be equated with Section 17(5)(h), and therefore the credit is not required to be reversed. That is a very good observation made by Madras High Court, and that is favorable for assessing. And then comes the most important issue of Section 17(5)(h), that the reversal which has to be made under Section 17(5)(h) with respect to goods which are lost, stolen, destroyed, or so on, whether this transaction would qualify to be exempt supply. Why this question arose? See, this question arose because let's say your input got lost, then you have to reverse the credit with respect to that input. Definitely, there is no doubt about it. However, the question is if it qualifies to be exempt supply, then you will have to reverse all the credit, be it directly being used for such inputs or indirectly being used or commonly used for such inputs vis-a-vis your other activities. For example, your administrative activities being done in your office or your auditing activity being procured from the auditor. So that is a service which definitely pertains to an activity or inputs which are being stolen or lost by your company. So then the issue arises, if this transaction qualifies to be an exempt supply, तो फिर आपको इसे exempt supply में मानकर रूल 42 43 का रिवर्सल करना पड़ सकता है, as by treating it to be exempt supply and common credit पे आपको reversal ratio लगाना पड़ेगा. That is the one of the most problematic issue, wherein the Maharashtra AAA and Karnataka AR upheld कि yes, in these cases आपको इसे exempt supply मानना पड़ेगा. Why exempt supply? They said कि since you are making a supply without any consideration, and therefore this will qualify to be an exempt supply, नॉन टैक्सेबल सप्लाई जिसके ऊपर आपको आईटीसी रिवर्स करना है इन रिस्पेक्ट ऑफ ऑल इनपुट सर्विसेज एंड कैपिटल गुड्स विच आर बीइंग यूज्ड इन दिस रिस्पेक्ट. अगर हम इस एनालिसिस को एक बार देखें तो एग्जेम्प्ट सप्लाई हैज बीन डिफाइंड अंडर जीएसटी, जो कि कहता है कि स्पेसिफिक दो सप्लाईज विच आर स्पेसिफिकली एग्जेम्प्टेड फ्रॉम द परव्यू ऑफ जीएसटी, and it includes certain other part. And non-taxable supply means a supply of goods or services or both which is not leviable to tax under this act. So basically, अगर हम देखा जाए, so none of these provisions capture or covers this particular transaction wherein the goods are basically lost. So neither this get covered under exempt supply nor under non-taxable supply. However, since the word 17(5)(h), section 17(5) starts that in respect of the following goods, the credit cannot be availed. Therefore, the doubt arises कि in respect of following goods, even if I have availed input service and capital goods, I'll have to reverse entire credit. This issue even multiplied when Circular 92 by 11 by 2019 discussed the same issue, and they said samples which are supplied free of cost without any consideration do not qualify as supply. However, it said that the input tax credit shall not be available to the supplier on the input services and capital goods. To that extent, they are used in relation to the gift of free samples. So basically, even if we say thankfully, the circular said that this is not a supply. However, the advanced ruling said that this is even a supply. But the circular said that the ITC on input services and capital goods will have to be reversed. There, the issue arises that even if we accept this view, then if you go to Rule 42 and 43, which applies on reversal with respect to exempt supplies, in that case, there is a specific line item for reversal for goods relating to section 17(5) that says that section 17(5) से related goods का reversal आपको वो करना है, and then the common reversal, that is the common credit into exempt divided by taxable, that reversal is specifically applicable in case of exempt supply and taxable supply. And as we have already discussed, this is not a supply at all. So how to do the calculation? So this is basically, if we see, the mechanism has not been given for the purpose of this type of reversal. And keeping this in mind, we can take a view that there is no requirement to reverse other input services, etc. in respect of these items which are lost or stolen or which get covered under section 17(5)(h). There is no requirement of reversal under under rule 42 or 43 because there is no mechanism to do so. And if you see rule 43, that is with respect to capital goods, there is no line item even for section 17(5) at all. So that even raises a question that whether we'll have to reverse the capital good credit with respect to these section 17(5) reversal at all. This is another issue which has not been clarified so far by the government. But if we see the circular and the advanced ruling, they clearly say even with respect to capital goods, you will have to reverse credit. But these issues are particularly about Section 17.5. But if we move ahead, then we come to Schedule 1. This is very important. Schedule 1 ka entry 1. Whenever you read Section 17.5H, that should be read along with Schedule 1 entry 1. Why? Because it says activity of permanent transfer or disposal of business asset where input tax credit has been availed on such assets shall be deemed to be a supply under GST. Now let's take a scenario that you are contributing under the CSR activity, the oxygen concentrators. You, at the time of purchase, thought that this would be used for your employees. You availed credit on that. However, then you decided to distribute it under CSR activity to the general public. देन सेक्शन 17.5 कुछ से कि आपने इसे डिस्ट्रीब्यूट किया है वॉलंटरली इरिस्पेक्टिव ऑफ द फैक्ट कि ये स्टैट्यूटरी ऑब्लिगेशन बन सकता है बट अगर आपने इसे वॉलंटरली आपने डिस्ट्रीब्यूट किया है तो आपको इसको इसके ऊपर क्रेडिट का रिवर्सल बनता है एंड देन शेड्यूल 1 एंट्री 1 से कि सिंस आप ये परमानेंट ट्रांसफर कर रहे हो किसी और पर्सन को विच क्वालिफाइज टू बी योर बिजनेस एसेट तो आपने उस पर कभी आईटीसी लिया था तो यू विल हैव टू पे जीएसटी ऑन योर आउटवर्ड सप्लाई. So then comes the double hit. First, I'll have to make reversal under Section 17.5H. Second, I'll have to also pay tax under Schedule 1 Entry 1. So this is the major issue which arose because of the Schedule 1 Entry 1. So if we actually see this issue, so this issue was being handled by the circular 92 by 2019 itself, wherein they said when a transaction becomes a deemed supply under Schedule 1, then there is no requirement to reverse credit under Section 17.5H. However, if someone is reversing a credit under Section 17.5H, whether he is required to still pay tax under Schedule 1 or not, that is not being cleared. So basically they said कि अगर आप सेक्शन शेड्यूल 1 की एंट्री 1 में टैक्स पे कर रहे हो तो आपको क्रेडिट रिवर्स नहीं करना बट अगर हम क्रेडिट रिवर्स कर देते सो कैन वी से कि शेड्यूल 1 का एंट्री 1 लगेगा ही नहीं दैट वाज नॉट क्लैरिफाइड इन माय व्यू दैट कैन बी सेड why because the schedule 1 entry 1 itself says where ITC has been availed so we have a case to say since I have reversed the ITC there is no ITC availed anymore therefore schedule 1 would not apply therefore we can say either of the two provisions, either section 17.5H or your schedule 1 will come into picture with respect to certain disposal of assets to your without any consideration. This also brings us to another issue of mixed supply. Whenever we talk about, I'll now highlight certain promotional schemes. जब भी हम कुछ promotional schemes की बात करते हैं like buy one get one, buy this much get this much free, buy 500 buy shop for 3,000 get a bag worth rupees this free. Whenever हम लोग इस टाइप की promotional schemes की बात करते हैं तीन सेक्शन पिक्चर में आते हैं. One is section 17.5H, whether you are disposing it off as a gift. Second schedule 1 ka entry 1 whether you are disposing it off as a business asset without any consideration. Third is whether this is a mixed supply or composite supply or not. So basically all we know are aware of the concept of mixed supply. Key mixed supply is something which does not qualify to be composite supply and composite supply if I talk generally is a supply which is not made a composite supply is supply which is made in conjunction with each other that is generally in common parlance the two supplies are given together. This is a very general common parlance definition of composite supply. So mixed supply is something which does not satisfy the criteria of composite supply therefore those two supplies which are bundled together but industry does not treat it as a composite supply then that would qualify to be mixed supply. And the very famous rule of mixed supplies is if a supply qualifies to be mixed supply then the highest rate of supply would apply in that case. So here if we see there are certain promotional schemes like pens or bottles etc given free with children's milk flavoring drink. This can happen that pens and bottles are taxable at the rate of 18%, and children's milk flavoring drink is also taxable at the rate of 18%. So basically, both are taxable at the rate of 18%. However, these pens and bottles are given as free. There can be a scenario wherein these promotional items are shown as separate line item in the invoice with zero value, or the promotional item is not shown at all in the invoice value in the invoice at all. So this raises a question that can we say that this is a given as gift voluntarily in nature, and therefore as per section 17.5h will have to reverse the credit which attributes to this particular equipment, that is pens or bottles which are given as free. I would like to highlight here that this has been held in multiple instances, be it in India or be it outside India, when it has been held that nothing is given free. If you are giving free something with another thing for which a consideration is being charged, that is अगर आपने कुछ दिया है किसी और चीज के साथ जिसके लिए आपने कंसिडरेशन चार्ज किया है, सो बेसिकली फ्री वाली आइटम का कंसिडरेशन आपको दूसरी कंसिडरेशन में ऑफलोड करना है. आप कुछ गिफ्ट नहीं देते, दिस इज मेयरली अ सेल्स गिमिक, सेल्स प्रमोशन गिमिक, नथिंग एल्स, नथिंग इज गिवन फ्री. Let's just understand this analogy from various jurisprudence. So if we see Australian GST ruling 2001 by 8, उन्होंने example 5 promotional pack के through थोड़ा सा explain किया, wherein they said कि जब आप टी को चाइना कप एंड सॉसर के साथ देते हो, since tea is GST free but cup and saucer are taxable under GST, they said कि these does not seem to be composite supply because every item comprises its significant value. They said this is a mixed supply, and tea and cup and saucer are separately identifiable. Therefore, this will qualify to be mixed supply and highest rate will apply. Secondly, if we see Ireland Department of Tax and Customs or mixed supply of goods or services, thereon also they discussed if there is a requirement for the customer to pay a consideration in connection with the receipt of an product, even if supplier describes part of that product as a gift or free, that is only a promotional scheme. It does not come with the terms of gift for tax purposes. Where there is a consideration, it is always referable to all the products supplied. So Ireland department says कि जहाँ पर आपकी sales promotion scheme में like buy one get one, buy one get four etc. अगर consideration involved है, so that consideration attribute to all the items which have been supplied. Similarly, Indian jurisprudence may be this view has been taken in various instances under central excise law. And if we see even the circular of 92 by 2019, this view has been accepted by the circular, that is by the department itself. When in case of schemes like buy one get one, there is nothing given as free or without any consideration. Rather, the question will have to be analyzed from a composite vis-a-vis mixed supply. And then they said there is no requirement to reverse any credit. So with this, if I say that if something is given free along with another item for which a consideration is being charged, we have a very good case to say section 17.5h will not come into picture. Why? Because there is nothing given as free. Secondly, schedule 1 entry 1 would also not come into picture because there is nothing being distributed without consideration, and in this case consideration has been charged. However, the issue would arise from a composite supply and mixed supply perspective. The question can specifically arise in those cases where the promotional item is given which attracts higher rate of tax than the other main item. For example, you have given a caffeinated drink with the other health drink. Health drink is taxable at the rate of 18%, but caffeinated drink is taxable at the rate of 28%. So, in those cases, there can be a problem that if it qualifies to be a mixed supply, a single consideration is charged for both the items, which does not qualify to be composite in common parlance, then the highest rate will apply on the entire bundle. Therefore, you may have to pay tax on the 28% on the entire bundle. So, that is the main problem which can come in these type of promotional schemes. And if even if someone wants to take a view that no, I have given free something, so please reverse my credit, but don't ask for the highest rate of tax on the entire bundle. It will be highly contentious to argue this, and basis the various jurisprudence we have, be it under foreign law and Indian law, this proposition will be highly contentious unless and until we draft or devise our promotional scheme in such a manner that can help us fighting this case. So basically, while building these promotional schemes, you have to keep in mind these items, etc., these issues which can come up in future. So certain example of these promotional scheme can be like a carry bag given to carry the finished goods in a grocery store. So can we say that the carry bag is given gift as a gift or given free along with the grocery stores? In my view, again, as we said, nothing is given free. Carry bag also carries a consideration which has been charged through another mode, and we can say that this would qualify to be a composite supply. Therefore, carry bag ka rate should not apply to the entire bundle. However, there can be another scenario wherein shop for 3,000 and get a bag worth rupees 1,000 free. This can be a problematic issue wherein the garment may attract 12%, but bag may attract 18%. And since in common parlance, there is no such promotional scheme or not, these promotional schemes are normally not adopted by the industry uh, wherein a garment and the bag is given along with these garments, etc. Therefore, in this case, the question of mixed supply can come into picture. In my view, this would qualify to be a mixed supply, and therefore, in the entire bundle, 18% may apply. However, if we see another transaction wherein we say that shop for rupees 3,000 and get a bag worth rupees 1,000 at rupees 10. So, if we see, we are not saying get a bag worth rupees 1,000 free, rather at a very nominal value. This case still has a case to say कि since I've charged something for my bag, therefore this is not a mixed supply. But we'll have to keep in mind that the value should not be very nominal. Like in this case, one for 1,000 worth rupees bag is given for only rupees 10. This can create a problem. However, if a reasonable value is being adopted, then we have a case to say that this is not a mixed supply. So if we move forward, that this we have seen the promotional scheme of goods. But there can be another activity that is free services. This is the normal activity that hotel industry, like for example, hotel industry, gives accommodation free to their special guests, right? Or sometimes as a promotional scheme, they give free accommodation for 3 days, 2 nights, etc. This is the normal promotion being done by them. Another can be like Amazon subscription given free on purchase of some kitchen appliances. So we have also seen in the industry when free services are being given along with the other items for which consideration is charged, or even if free services can be given wherein no consideration is charged. Then the problem arises, is there any applicability of section 17(5)(h) in those cases? बेसिकली द क्वेश्चन इज क्या सेक्शन 17(5)(h) फ्री सर्विसेज के केस में लगता है? अगर आप सेक्शन 17(5) एक बार देखें, सो देर आर 3 डिफरेंट एंट्रीज. इफ वी सी एंट्री नंबर एफ, क्लॉज एफ, जो बात करता है गुड्स और सर्विसेज आर बोथ रिसीव्ड बाय अ नॉन रेजिडेंट टैक्सेबल पर्सन. Then clause G talks about goods or services are both used for personal consumption. And then clause H talks about goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples. So if we compare clause F, G and H, F and G में specifically उन्होंने goods and services को use किया, लेकिन H only talks about goods and not services. Can we say this is a deliberate provision being captured by the government and not the like mistake? Similarly, if we see Schedule 1, activity of permanent transfer or disposal of business asset, they haven't used services again here, where ITC has been claimed. So here the question arises कि क्या ये व्यू लिया जा सकता है कि गवर्नमेंट का इंटेंशन ही नहीं है कि फ्री सर्विसेज को यहाँ पर यूज करना? In this regard, we can refer to foreign students, wherein they have also accepted this view कि goods and services का very nature is very different. Goods के case में it is very easy to identify the back-end goods or back-end ITC. However, in case of services, that can be very difficult to identify the back-end service. For example, in case of hotel industry, when you are giving 2 rooms free to your special guests for 2 nights, then it is very difficult for you to compute the value of those services. Therefore, they have said that yes, there are different nature of these goods and services, and to identify the back end cost could be different in both the manners. So, therefore, basis that, in my view, we can take this view that the intention was not to cover the services at all in this section 17(5)(h), because they have specifically referred to as goods only and not the services, while at other places they have specifically referred goods or services both. So placing reliance on that, in my view, we have a good case to say कि services को capture ही नहीं करना चाहते हैं, and therefore there is no requirement to reverse credit in respect of free services being given by a company. However, advanced ruling authorities does not agree with this view. They have stated in multiple instances that when promotional services are given to customers or retailers or so without any charges, then you are required to reverse ITC by stating the same proposition that this would qualify to be an exempt supplier. But we have a very good case to ask them that how would this qualify to be even a supply? Free services to an unrelated party without any consideration, how can this even qualify to be a supply or even exempt supply? So basically these, if we see that AAAR Karnataka has disallowed the case of applicant by stating that free services will require reversal under Section 17(5)(h). However, there is another advanced ruling authority of Karnataka which had a divergent views on this aspect. One of the members said that no, there is no requirement to reverse any credit. However, the another member said that there is a requirement to reverse any credit. However, since they had a different view, so this advanced ruling does not have a very good, a very good uh, binding force, etc. So therefore, that can be problematic. But since still, in my view, basically after reading Section 17(5)(h) along with the foreign jurisprudence, we have a case to say that there is no requirement to reverse ITC in respect of fee services. With this, I'll come to my another topic of the day, that is point of sale material sale or point of sale material distribution. What is point of sale material? Point of sale material is being like goods being distributed so as to communicate or being distributed to as a business promotion, like materials like brochures, pamphlets given to customers for informing them about your products. So it is the normal general practice of the industry that you go to an educational institute, they would give a pamphlet or brochure to you about their organization. Or be it you come to a consultant or any auditing firm, or be it anyone, they have a brochure themselves with them and they distribute it at a various events, etc., so as to communicate the other party or potential customer about the nature of their business and the kind of services or goods they offer. Similarly, there can be a scenario wherein materials like banners, posters, stickers, etc., given to retailers which talk about or which basically have the reference of the goods or services being supplied by the supplier. So, is it the free distribution of goods which should be covered under Section 17(5)(h)? So, basically, here we'll have to keep a reliance or keep a difference between goods distributed as free or voluntarily and goods distributed so as to communicate the activities being done by you. So, whether the goods are basically medium of communication or these are merely a business assets which are not means of communication at all. So, in this respect, UK VAT laws specifically talks about this particular aspect, wherein they said the point of sale display material. In such cases, there is no requirement to reverse any ITC with respect to such free distribution, etc. Because sale display materials to retailers or other business customers for no consideration, direct promote your business, direct support your business. This is merely a means of communication and not a distribution material. Therefore, credit should not be reversed in this case. So, however, they also contrasted with the other view, with the other cases wherein the pens, calendars, etc., and T-shirts, etc., are given free of cost or are freely distributed to a potential customer. Then they said that the same can be said to be in the nature of gifts, and the same are not means of communication, etc., which talks about your business or which give a reference of your business or knowledge of your business. Therefore, in such cases, yes, you will have to reverse ITC as per section, as per the similar provision which is there, which is similar to section 17(5)(h). So basically, however, if we see the advanced ruling in this respect also, so they have, without categorizing or without differentiating between the means of communication vis-a-vis other promotional items, they have simply said, be it carry bags, calendars, diaries, pens, etc., whatever has been distributed free of cost to a distributor or retailers, that shall fall under Section 17(5)(h), and you are required to reverse credit on such items being distributed free of cost. So, in my view, these advanced rulings are not correctly placed, and they should consider the general business models which are basically prevalent in the industry. With this, if I summarize, my analysis here, then we should definitely understand the promotional schemes, the activities which can be covered under Section 17(5)(h) and vis-a-vis Schedule 1, and we should devise our strategy in a manner that should at least hamper your cost. Basically, we should devise a strategy so as to that should be tax efficient in nature. For example, whenever you are making a promotional scheme, instead of giving something of free which attracts higher rate of value, better you give a free an item which attracts the same value as the main item. Similarly, even if you are giving something as if you want to distribute something as a promotional scheme which attracts the higher value, better we apportion some value to that. So in this manner, we should devise our promotional strategy in a manner so that हमारे ITC का loss and other taxation का loss should be least as possible. So with this, I would conclude my session here, and we can have a question and answer session, Prachi, if there is any.
Ma'am, yet we don't have any query from the viewers.
Okay, then I think we can conclude then, right?
Yes, ma'am. We should
Okay,
conclude the
thank.
session. So thank you, CA Kriti ma'am, for giving your valuable time to us and putting input in this 14 days webinar Mahakumbh. It was a great session and well explained. So thank you so much, ma'am, for being here.
My pleasure. Thank you.